What is the price of a financial plan? That's one popular question. Today, though, I'm going to look at the flip side of that and talk about what's the cost of not having a financial plan. But before we talk about the cost of not having a financial plan, let's talk about what a financial plan is. Well, a financial plan is a document. When we say document, it could either be a soft document, meaning it's a digital document, or it could be a hard copy, physical, paper. And what that document does is it outlines your current financial situation along with your short-term and long-term goals, and his financial plan has strategies for achieving those goals. Now, I know the other question you may have is, okay, what goals and what areas does the financial plan cover? Well, according to FP Canada, these are the areas that's typically covered. And these are the areas that my plan covers with a few others. The first one is financial management. And what that looks like, it looks at your cash flow, it looks at your net worth. So we're evaluating your cash flow management, your savings development, your effective debt repayment, your spending, saving, borrowing. Essentially, that's what we're looking at from a financial management standpoint. The second section that we're looking at, second area we're looking at, is insurance and risk management. And why are we doing this? You could have the best plan in place, but if an unforeseen event happens, that could essentially put, quite a bit of damage to the plan. It derails the plans that you have, right? And when we talk about plans, these unforeseen events could be death, disability, critical illness, being sued, right? So we're evaluating your situation. We're looking at your current risk and see what we can to protect you and mitigate any unforeseen event that could cause some type of financial loss. So that's what insurance and the risk management area is. Then there's the investment planning. And what we do here is we focus on optimizing your assets. And of course, we have to consider your risk tolerance and investment goals. Well, essentially, what we want to do is optimize your assets. And when we think about assets, I really think about three asset classes. There is first paper assets, which are investments, so mutual funds, stocks, ETFs, etc., etc. Right. The second one, business, and then the third one that we look at is really real estate. And I know sometimes real estate falls into business, but oftentimes people view it separately. So I kind of look at it as three asset class. And what we're doing here is we're focused on optimizing those assets. The next one is tax planning. And what we're doing here is we're reducing or deferring your current or future tax liabilities through some type of strategic planning such that you're as tax efficient as possible. And what that does is it really enhances your financial position. In what way? Well, if we're reducing your taxes, obviously, means you're paying less taxes, you have more money to invest and go towards your plan. Or essentially, we could be deferring those taxes, meaning it allows your money to compound and grow for a longer time basis, which in many instances work out for the best, right? So that's what tax planning is. And we're making sure that you're in the best financial position as possible and you save as much money. Next one is retirement planning. And really, what that looks like is what happens to you post employment, right? So we ensure that your retirement lifestyle can be supported by your projected income and your assets. Now, this requires ongoing assessment because it changes, inflation and the portfolio might be changes in the portfolio, might be changes in your income, emergencies happens, expenses, or, you might get an inheritance. But essentially, that's what retirement looks like. And I know for a lot of people say, oh, I'm not going to retire. Well, we at least look to see, when you want to be financially independent and have the option to retire and what that looks like after that time. Because for a lot of people, they want to continue working maybe on a part-time basis, or they want to go from being employed to being a consultant, things of that nature. But essentially, that's what retirement planning is. We look at what happens post employment. Then there's estate planning and legal aspects. No, with estate planning, what is estate planning? Well, we're focusing on the asset distribution that you have upon your death. And we're looking at your beneficiaries and we're seeing what's the best way to transfer these assets over to them, right? And, with estate planning goals, you could have the best plan in place, but sometimes there are huge disagreements after. So where we can, we have conversations as a family. We make sure the executor is up to date, whether it be from a corporate level, you could have a corporate executor, or whether it be the person you choose, sister, cousin, aunt, friend, whoever. Make sure that person is capable and make sure that person has the right information to make the decision when the time comes. And of course, we also look at the legal aspect, the legal circumstances, because of what a lot of what we do as financial planners is grounded in law. For example, financial planning, family law plays a huge part in financial planning. For example, tax law obviously plays a huge part in tax planning. So we have to understand the legal circumstances, and make sure we're informed and we convey this stuff to our clients. And here's the thing: sometimes it goes a lot deeper, and that's where we bring in experts. I myself am a lawyer. I'm not practicing lawyer, but I would not go beyond the line of start practicing law. And so we bring in our network of experts, whether it be business lawyer, tax lawyer, whoever it is, if we really need to get some decision made. No, to the cost of not having a financial plan. This study came out by Serrano, and it's called More on the Value of Financial Advisor. Well, the 2008 results confirm the positive impact of having a financial advisor. Specifically, it states for those who have a financial advisor for 15 years or more, they had asset values of 131% higher than the average comparable household without a financial advisor. Folks, that's quite significant, right? See how significant this is. It's as significant as saying if you're going to retire with $1 million without a financial advisor, then working with one would mean you have $1.3 million. That's an extra $310,000. Now, a lot of people are going to say, okay, what type of financial advisor? When you think about financial advisors, the one that they spoke about in the book were a lot were from the banks, and some were from were independent advisors, right? And what I spoke about before was a financial plan, which was probably more comprehensive in certain situations than the advice being given by the financial advisors here. So what I'm talking about is even more comprehensive and potentially even more beneficial, at least in my assessment. But nonetheless, the big takeaway here is that, you know, retire with $1 million, if that's what you are on track to do without a financial planner, versus retiring with a financial advisor, and now you have $1.3 million. That's an extra $310,000. So a lot of times we tend to, we tend to focus on what's the price of the financial plan. Other thing that we should be considering is what's the cost of not having a financial plan, which here I believe is quite significant. And so it's one way to look at the price, but you have to look at what the potential is here. No, what you also want to do is make sure you have a financial advisor that is good at what he does, that is knowledgeable. In most cases, I'm going to say a certified financial planner is probably pretty good because they've gone through the standards, and have a conversation. What did their process look like? How have they worked with other clients? Have they worked with clients like yourself? How long have they been in the business? What are their expertise beyond just having a certified financial planner? If you're a business owner and you're looking at retirement, you're looking at selling your business, you may want to work with a certified exit planning advisor, which is, which is another designation, right? It all depends on your situation, but nonetheless, the big thing and the big takeaway here is working with a financial advisor is quite significant, and the benefits are pretty huge. Hopefully, this was helpful, and I will see you next week.